Bitcoin, BTC, the world's largest and most recognized cryptocurrency, is once again in the spotlight as we move deeper into the second half of 2025. Prices have been trading in a relatively strong range, hovering between 112,000 and 116,000, reflecting renewed momentum across the market. What makes this rally particularly significant is the confluence of factors driving it: rising institutional demand, the success of spot Bitcoin ETFs, miner accumulation, and growing corporate adoption. Together, these elements are shaping a landscape where Bitcoin continues to cement its role not just as a speculative asset, but as a core component of the global financial system. Current market overview: in recent weeks, Bitcoin's price has rebounded from a mild correction that briefly pushed it below the $110,000 threshold. The bounce back has been swift, with renewed buying pressure emerging from both retail and institutional investors. As of mid-September 2025, BTC consistently trades between $112,000 and $116,000. One of the key drivers behind this recovery is steady accumulation by large holders. On-chain data shows that wallets holding between 100 and 1,000 BTC, often categorized as whales, have been increasing their exposure, a pattern historically associated with sustained bullish cycles. Alongside this, institutional players such as hedge funds, pension funds, and asset managers are strengthening their Bitcoin allocations, further reinforcing confidence in the asset. This accumulation phase has lifted Bitcoin's market capitalization above $4 trillion, a level that highlights its dominance not just in the crypto market, but also in comparison with traditional financial assets. To put this in perspective, Bitcoin now stands shoulder to shoulder with some of the largest global companies and is increasingly viewed as a macroeconomic hedge against inflation, currency devaluation, and financial instability. Institutional adoption and the role of spot Bitcoin. ETFs. Perhaps the single biggest catalyst of 2025 has been the launch and rapid growth of spot Bitcoin ETFs in the United States and globally. Since their approval earlier this year, these ETFs have attracted over $48 billion in net inflows, a monumental achievement that has reshaped the investment landscape. Unlike futures-based ETFs, spot ETFs directly hold Bitcoin, offering investors clean and regulated access to the asset without the complexities of wallets, exchanges, or private keys. This has opened the door to a much broader investor base, ranging from high-net-worth individuals to large-scale retirement funds. Notably, major players such as BlackRock, Fidelity, and Vanguard have integrated Bitcoin into their investment strategies, treating it as both a growth asset and a hedge. These endorsements carry enormous weight in traditional finance, effectively legitimizing Bitcoin in the eyes of skeptical investors and regulators alike. Adding to the intrigue, there has been increasing speculation about the formation of a U.S. strategic Bitcoin reserve. While not officially confirmed, discussions within policy and financial circles suggest that Bitcoin could eventually be treated as a national strategic asset, similar to gold reserves. Such a development would mark a historic shift, potentially accelerating Bitcoin's adoption worldwide and creating a new paradigm for sovereign asset management. Mining activity and sustainability efforts. Another crucial dimension of Bitcoin's market health is the activity within the mining community. Miners who secure the network by validating transactions are often seen as a leading indicator of long-term sentiment. Currently, miners are displaying strong accumulation patterns, mirroring behaviors seen in previous bull markets. This suggests confidence in higher prices ahead and reflects a belief in Bitcoin's long-term sustainability. At the same time, mining remains a subject of debate, particularly regarding energy consumption. Critics continue to point to Bitcoin's carbon footprint, but the industry has made notable strides in adopting renewable energy sources. From hydro and solar farms in Latin America to wind-powered mining facilities in North America, the shift toward green mining is accelerating. Additionally, the push for efficiency has spurred innovation in mining hardware, reducing overall energy requirements per transaction. These changes are not merely cosmetic. They play a critical role in shaping the public and regulatory narrative around Bitcoin. making it easier for governments and institutions to support broader adoption. Market forecast and technical outlook. From a technical perspective, Bitcoin is currently positioned in a bullish consolidation phase. Analysts suggest that if the current momentum continues, BTC could target $120,000 in the near term, with further upside potential if institutional inflows remain strong. Key support sits around $104,000, a historically important price level that has acted as a springboard during past corrections. Should Bitcoin retest and hold this support, it would likely reinforce investor confidence and create the foundation for another upward leg. However, volatility remains a defining feature of the crypto market. Bitcoin's price movements are influenced not only by internal dynamics like whale accumulation and ETF inflows, but also by macroeconomic factors. In particular, the market closely watches the U.S. Federal Reserve's interest rate policies. Any signals of rate cuts or prolonged dovish stances tend to drive liquidity into risk assets, including Bitcoin. While hawkish policies can temporarily dampen momentum, broader industry developments. The bullish sentiment around Bitcoin is also part of a broader wave of optimism sweeping through the crypto sector. Ethereum, ETH, has regained strength, supported by robust ETF inflows that mirror Bitcoin's trajectory. This has renewed interest in Ethereum's role as the backbone of decentralized finance, DeFi, and Web3 innovation. Meanwhile, XRP continues to attract institutional adoption following favorable regulatory outcomes earlier this year, reinforcing its relevance as a cross-border payment solution. Beyond individual cryptocurrencies, the intersection of AI, fintech, and blockchain is accelerating innovation. Projects integrating artificial intelligence with decentralized finance are expanding possibilities for predictive analytics, automated trading, and risk management. At the same time, traditional financial institutions are increasingly experimenting with tokenization of assets, using blockchain as a foundation for more transparent and efficient systems. Summary and outlook. In summary, Bitcoin remains firmly positioned as the dominant force in the cryptocurrency market. With a market cap exceeding $4 trillion, steady whale accumulation, and unprecedented institutional inflows via spot ETFs, the digital asset is enjoying a period of strong momentum. The mining sector's shift toward greener practices, coupled with potential sovereign interest in creating a strategic Bitcoin reserve, underscores the growing recognition of Bitcoin as a strategic financial asset. Technical indicators point toward a continued bullish trend, with near-term price targets around $120,000 and strong support at $104,000, providing a safety net for investors. As Ethereum, XRP, and other major cryptocurrencies maintain momentum, and as AI-driven innovations reshape the financial sector, Bitcoin stands at the forefront of a transformative shift in global finance. Its role as digital gold is no longer just a metaphor. It is increasingly becoming a reality as individuals, corporations, and governments view Bitcoin as a hedge against uncertainty in traditional markets. For those seeking real-time updates, regulatory developments, and market forecasts, trusted sources such as NewsNow, FX Street, and Cointelegraph remain invaluable. As we move forward, the next chapters of Bitcoin's journey will be written not only by traders and miners, but by the very institutions and governments that once dismissed it. Bitcoin's story in late 2025 is one of resilience, legitimacy, and unstoppable momentum.